All right, everyone, welcome back. Today we are going to discuss different types of mortgages. On a previous video, we discussed different credit scores that you would need for a mortgage. Today we're going to discuss, get a little bit more into the mortgage area and discuss the different types of mortgages that currently exist. So let's just go ahead and get started. The first one we have is conventional, which is probably one of the most common mortgages that people use. It's basically your standard mortgage, no special programs, in terms of, big programs. So with conventional, you typically just get, the market rate for the interest, for your interest rate, the market interest rate. Down payments can vary quite a bit with conventionals. They used to be like you need 20% down for a conventional. Now you can 3% is pretty common for conventional now if you're going to occupy the property. Sometimes you can get down to 1% when it comes down to a conventional and still not have to pay additional fees to be able to put such a low down payment down. And so that's what conventional is. I mean, that's basically where a lot of people end up going through. It does have pretty good requirements, pretty high requirements to get that. Typically you'll need at least above a 680 to get that. I mean, obviously you could still get it below the 680 mark, but it comes with a lot more, restrictions, and they need a lot more information from you, and to limit the bank's risk. So on the next one we have is FHA, which is just short for Federal Housing Authority. This one is a 3.5% down payment. Requirements for this one in terms of credit score are a lot lower. It's pretty much people who have like iffy credit, it's not terrible credit, but it's not perfect or great credit. If you just have like the fair or good credit, typically a lot of people will go with an FHA. They do get lower rates usually with an FHA. You have a 3.5% down payment. That's a minimum for an FHA. So it's 0.5% higher than a conventional. But also with an FHA, you typically have what's called mortgage insurance, which is just another part of your payment. So it actually will increase your monthly payment with mortgage insurance. Basically what mortgage insurance is, just to give you a brief overview of that, we can discuss that, the whole aspect of that in a different video. But mortgage insurance is just insurance for your mortgage. You have homeowners insurance, which covers your home, and then you have mortgage insurance that will cover your mortgage if it protects the bank if you default on the mortgage. You typically need that if you put less than 20% down. But going back to conventional really quick, a lot of the programs that are out there right now for conventional, 3% obviously is less than 20%, but they still are not requiring private mortgage insurance for conventionals at a 3% down payment, because it's just part of the program that they're using. Typically you would need 20% to avoid that. If it's an investment property and you're trying to put less than 20% down, you're most likely going to have mortgage insurance through a conventional as well. But in terms of people buying their own houses and living in them, you're probably not going to have mortgage insurance for a conventional, less than 20%, but for an FHA you will have the mortgage insurance when you put the 3.5% down. All right, and then on to the next one, we have the VA. Obviously this is only for a select group of people. Obviously people in the military will be able to use this one. It's actually, it is the best mortgage that you could possibly get, for obviously obvious reasons. I mean, they've earned it. And basically you can put 0 down and you get a really good interest rate. And the credit requirements are pretty similar to an FHA. Now obviously there's specific things that can vary between them two, but in terms of your credit requirements, they're pretty lenient. So if you can use a VA, I would say use it because it's going to be the best one. Obviously you put almost no money down to buy the house because your down payment's 0, and then closing cost, you can just get that paid for by the sellers, when you negotiate the contract, and you basically can walk in there with a few $100 check and buy, a $250,000 house. Sometimes you can actually even get a refund of a few $100s, you know, so obviously that would be amazing. So that's why VA is by far the best. You know, you can just, there it is. On the next one we have USDA, which it stands for the U.S. Department of Agriculture. That's who guarantees this mortgage. Theirs is almost as good as the VA's, except you can't use it everywhere. It's for rural America, but it's not for everywhere you would consider rural. Like, some suburbs actually will be considered USDA approved area. They don't always update these things, so as like developments get built and all that stuff, and cities and towns expand beyond their borders, they still consider that rural in terms of the USDA's classification of that, because they never updated their information. And you can actually still get USDA mortgages. And USDA mortgages, you will get another 0% down, and you get a pretty good interest rate. And if you do the same thing as like a VA person would do, is you get the sellers to pay for your closing costs, you can get almost a zero down payment on this house as well using a USDA. But like I said, they have to be in rural areas, but sometimes they're actually suburbs, depending on how new the area is and how recently developed it's been. All right, and then the last mortgage type is a 203K mortgage. Now these ones, they're FHA as well, but these ones are more of putting a house that needs to be fixed up or needs a lot of work to it. It may not even that much work to it. You just want to upgrade something in your house. This allows you to put remodeling funds, money, into your mortgage. So if you want to spend $20,000 on updating the house or changing some things out in the house, you put that into your mortgage through a 203K mortgage. That's the type of mortgage it's called. And you get that $20,000 when you buy the house to fix it up or remodel it or do whatever you want to it, as long as that what you want to do to it has been approved by the bank. These ones are obviously good for houses you want to completely renovate. Like if you want to get into a really nice neighborhood, but you can't afford a finished house that you want. Maybe you can find one that needs a lot of repairs to it. You can get it at a good price. You can still get that 203K mortgage, fix it up to exactly how you want it, and then you can move in. And you're living in where you want to be. Obviously, it takes time for the repairs to be done, so you don't get to move in right away. But you do that, and the amount of money that they actually will lend to you for a house is 110% of what the final product will be. So if after all the work is done, if your house is supposed to be worth $300,000, they will loan you up to $330,000. If it's a condo, they will loan you 100% of the expected value. So if it's a condo is going to be worth $300,000, they'll give you up to $300,000 for it. So they're pretty much the 5 common mortgages that you can get. Obviously, you can probably find tons of different ways. Like you can get private financing for mortgages, or other ways you can buy houses with cash. But these are the 5 general mortgage types that exist out there, and hopefully this gives you some general information that you need as you're searching for what kind of mortgage you want. Obviously, when you're getting closer to the home buying process, you want to speak to a lender, obviously, because they can go over your specific situation. They'll have the most up-to-date information about what will be great for you to use. But this obviously gives you some background information on what they are. So hopefully, you learned something in the video. And if you have any questions about mortgages, feel free to to leave a question below. We'll see what we can do to help you get that answer. And if you felt this was helpful, feel free to give it a thumbs up and subscribe so you get to see some more videos for real estate tips.